So welcome back, guys. As always, thank you for watching. Please remember to leave a like and subscribe if you do like the video. And I have a company for you guys today that I actually think that it's gonna be like buying Amazon back in the 2000. Well, of course, not the dot-com crash where Amazon went up to $200, then didn't recover for about 10 years. I'm talking about buying Amazon back in from 2001 to 2003, which the stock was around $5 to $17. Now the company I have here is actually STEM, or better known as ticker symbol STPK, which I actually alerted to people on my stock tweets account. If you guys want to give a follow, the description should be the link should be in the description as well. That should be at the front of the page. I actually alerted this one back in December 12. That was actually the first alert, although I did manage to get it for a little cheaper. I got in while it was 14. And at this point, when it was alerted, when I took the screenshot to send it to the group that I have on stock tweets, the stock hit 43 during that time. We started a position at 14. Of course, as we went up, we kept trimming, and any pullbacks we actually bought, because if you look at this stock's financial, I mean, it's just ridiculously undervalued, just based on the amount of potential that they have. So we alerted it back in December 12. That was at 17.20. Of course, the stock went up all the way to all-time high of 51.49, and right now it's hovering around 27. Of course, due to the enormous run up that it had. I mean, the stock went up almost 400, 300, 400%. Of course, from its original price, which is crazy, because of this bull market. Now, the most important thing that I wanted to talk about this one is just the market opportunity that they have. It's just incredible. I've been waiting for Kathy Wood from ARK Invest to buy this soon. That's all that's all I was talking about, and I'm still confident that she will. I mean, unless she has too much of her funds into this, but this is exactly the type of mentality that she has. She goes for disruptive AI. She just loves all those names, and this right here, this pure play STEM, puts all those together into one. And if you look at the tremendous just addressable market that they have, which is a 1.2 trillion market, I'm not sure if they're actually calculating like all the energy that the world uses, or which I sincerely doubt it. But they're expecting to target at 1.2 trillion in new opportunities deployed by 2050. And of course, they also have a battery storage capacity, and they're expected to increase that by 25 times by 2030. And it's always important to look at the company's management, not only at the company, because the management is just as important as just how much the company is growing. Those things go together. Whether you have a crappy management, like let's look at the crappy companies lately today. EBFM, that's the company that I had a position for a while, and the CEO just sucks. That's just through out of the companies I've had, she's the worst CEO that I have seen in a while. And right now, if you look at EBFM, that stock went up all the way up to 5. We bought it around 2, went all the way up to 5, and now it's 135 return. Then let's see, what did she do? I think she gave a discount of some sort. What did she do again? Can't remember now. This is bugging my mind. Okay, yeah. Recently, she did a 25% discount to where the stock was actually trading as. And if EBFM has actually a new product, which it's actually one of a kind product. It's a birth control with actually no side effects. Well, of course, every birth control had its side effects, but it's not hormonal. My mistake. And then after that, I'm not sure what came after this right here, but I remember exactly that it was due to her poor performance, and whatever she did, that just kept the stock continue to fall again. And this is what I'm talking about, worst CEOs. If you look at the stock's 5-year history, I'm hoping that we get a boat soon so that I can we can all get together and just get her out of there already. This is all this the stock performance is all due to her. Like, look how, if you look at this chart is extremely rocky. If you bought this 5 years ago, you're still in the negative, even although you were in the positive a couple years ago. If you went from 2016 to 2017, you would have been in the green. But lately, if you bought anywhere, let's say around June or something, you would have been up nice and okay. But then she, does another offering. And I'm not saying that doing offerings is bad. It's just that the CEO just sucks to do it at an amount that low when the stock was just $5 just a couple of weeks ago. It was $5 on February 17th, and she decides to do the offering at the 52-week low. And actually, I think it was below the 52-week low. So I'm just very pissed at this CEO, and I just, out of those CEOs that I have met so far, I definitely think that she is the worst by far. I mean, even worse than the Nikola CEO. That's just what I'm gonna leave it out right there. I think that she is extremely worse than the Nikola CEO, and I mean, that guy was a liar. She just doesn't know how to manage a company, or keep her shareholders happy, apparently. But I mean, it's back to STEM. As I was saying, besides the opportunity that they have with their revolutionized grid, not only do we have that, and the company is going at a tremendous rate. I mean, just if you look at the estimated revenue projections, this year, just this year alone, they were projecting 348% growth. They beat on that, and that was actually contracted revenue. 88% at that time. 88% of the forecasted revenues were under contract. That's in, they were going to get this money. It was going to happen. There was no other way that was going to happen. This was under a contract, and they actually they beat on that, and they actually put a new guidance. I'm positive that this is not the updated guidance. This is from the old guidance. But if you look at the recent full year 2020 results, they actually beat on that. They beat by 10% above the outlook at the provided time, which I'm sure is this right here. And looking ahead, they're well positioned for, of course, the fourfold expected increase in 2021 revenue, 100% of which is covered by our contract backlog, meaning that revenue has been secured and leaves opportunity for basically more growth, because you're not going to get less, you're only going to get more. So I mean, they expect to do a quadruple. I mean, they could even be close to a quintuple at the rate that they're going. When it comes to their growing revenues. And when you look at the partners here, they have huge partners. And not only do they have AI incorporated in the name, which is called Athena, I think that's how you say it. I'm positive I'm saying it wrong. Which is their AI system to use when it comes to, I think, their grid. I think that's what they're using it for. Again, I don't know much about how the system works. I'm just an investor that sees how a company is growing and then estimates where it's going to be over time. That's all we do here. And if you look at their partners, they have high quality premium partners. They have Amazon, Apple, Home Depot, Facebook, Google, of course Alphabet, which is the parent company, Walmart. Let's not forget, those are the copper ones. And then a lot of people that you see that they work with, because if they use their grid and their AI system, is they use them to provide cost savings to them. They have every major utility company. They have it on this list right here. Whether it's Southern Company, which I believe treats most of the, I would say, the upper half of the United States, because I used to be invested in Southern Company. I had a dividend portfolio, which I should probably release one soon. Most of the time that I saw that they provided, I think they provided most of their services to the upper part of the United States, which is called Southern, but they were mostly tangent to the north. They have Duke Energy. That was I would think it's the largest one. I think Dominion Energy, which cut their dividend, unfortunately. And then they have American Electric Power, which I think is AP. The ticker symbol is APE, possible. And then they have Edison, which I don't think is actually the Edison power company. It might look like a subsidiary or something. But if you look at the presentation, they're saying that the grid is being transformed, decentralized, and democratized. Not only do they save their customers power, of course they collect the information and they pass it on by lowering their cost generation. The battery hardware has rapid cost reductions, and their storage opportunities is a 25 times growth with a 1.2 trillion opportunity. That means the addressable market is so huge that the company has mostly gonna keep being a generation cash cow. Right now, I don't see any other competitors that get close to even close to STEM, besides Clean Spark Energy, which is also a Bitcoin miner that has a grid type of angle when it comes to energy. And I'm sure that we'll keep expanding at that, but STEM has just a unique opportunity, and it's actually a leader when it comes to the storage capacity for I believe batteries when it comes to deployment worldwide. They actually have more storage capacity than Tesla, which Tesla is the leader when it comes to electric vehicles, and I would think that they were the leader when it comes to batteries as well, but it seems that STEM came out to be the top winner when it comes to this. Apparently most of their market share is in California, which is the largest market in the US. Should be as expected. And here you have the projections for their AI platform, built on apparently 3 generations and 10 years of data experience, which of course over time is just going to keep growing and growing. Apparently their Gen 3 is servicing currently 40 utilities and markets, so that's a pretty big amount when it comes to the number of providers that they fill. Basically those utilities, Duke Energy, Southerner, and Edison, which was the Dominion Power, those are the largest utilities in the United States. So if they get one more, there is one more that I'm forgetting right now that is also a very large company. That if they could get their hands on that one, you officially have the biggest players in your hands, which I doubt that they'd be switching from STEM system into anybody else's system. I'm sure the STEM's cost savings are just too great for them to be able to switch over from here, to somewhere else. I don't think anybody provides that service that STEM has right now. And either way, their revenues right now are growing at a tremendous rate. They have 525 million cash on hand. They have 0 debt on the balance sheet. Of course, this was the presentation given back in December, I think 2020. So it could be a little different, but either way, I still expect them to have the same amount of cash, and I'm sure they will keep their debt at our current balance. Now, for the last earning, the company is not yet, I think, profitable. Not only is the gross margins are actually pretty good as well. If you look at I'm not sure if to use the pro formula gross profit, or I would use the norm one. I don't think they become, well, let's see, no, the gross margins are actually not as well as I expected them to be. I thought they were a little bit higher, between 30 and 40. That's an okay basis. They only get to that in 2023. That's a window finally increase, and I think between 40 and 60, that's a good gross margin. Of course, there are companies that have it up all the way to 100, but of course the company is still growing, and obviously we want them to spend all their cash to keep growing as much as they can. Revenues remain pretty elevated till 2024, which is 42%, which is actually a decent amount compared to what most companies are supposed to continue to grow at. And then after that, it slows down in 2026. But that's the current outlook as of right now. This company, the bookings of this company is growing tremendously. In 2020, they had a 65% year-to-year growth on bookings. They had 37% in 2021. They expect They expect 72% in 2022, and in 2023 they have 111% expected growth. And STEM has, over the past few weeks, has been trading so erratically between, I think we're between 30 and the 20s. As you can see, in this February 17th, it hit an all-time high of 51.49. After that, the stock has continued trading down, of course, with a few pullbacks. Continued trading down to 20s. Then of course we went back from the 20s to around the mid 20s, 27. I think it hit 33 around March 15th, and then recently we've been back to 21. Now that doesn't have to be much with STEM or how the share performance. I don't think that they're going to be just a dump, a pump and dump, where the share prices go up like any SPAC and then they crash. I mean, a lot of this has to be correlated due to the SPY. SPY has been crazy. Like one of the stocks that I'm talking about is RMO, which is Romeo Power. Romeo Power hit an all-time high of 39, and I was actually able to get a couple shares of them of 18 and ride all the way up. And I thought that the stock was going to keep higher by looking at Quantum Escape. When you look at Quantum Escape was unbelievably undervalued. This was a company that had absolutely zero revenues till I believe 2024, and it was trading at just a huge PE ratio that you wouldn't believe. That if you only looked at that stock, you would think, yeah, this was definitely another bubble. This was another EV bubble, and I mean, it was right. They were right to do that, but there's still a lot of companies that are still significantly undervalued. RMO was one of them that hit 40, and it's currently trading at a measly $11, hitting I think 13 early. Well, at an all-time low of 842, which I mean, whoever held from there. I don't know. I don't even know why you would hold. When I'm in a position, if it hits my certain amount of loss, I am completely out. I'm not gonna stay I'm not gonna stay and keep going all the way down and be a backholder. At the time, I went up, so I went all the way to 30, and my stop loss hit around 30, and I was out. Now of course I wish I would have gotten out at 40, at 39, but that's impossible to time. You can't time persistently. You can't really time those moments. And then you have for STEM, not only do they have their tremendous revenue growth coming with them and their platform and their AI, we have Biden, and under the Biden administration, the only thing that STEM is going to do is continue to grow. Not only, I think we're a couple of weeks away from Biden announcing his $3 trillion on spending on infrastructure and fighting climate change, which $3 trillion for STEM's market cap, that I think it's only around a couple million, maybe 1.2 billion. I'm sure it's below that. All this money is going to be put forward to fight climate change. So hopefully we might see an EV comeback. Stocks, the charging stocks, which have been just hammered. Because, I mean, it looks like the EV bubble popped, but still, there's still a lot of formidable companies in that area that deserve to be trading at a much higher valuation than they are right now. Just to name a few, NBAC, CLII, SNPR, three of those are charging stocks that deserve to be at a much higher, valuation than they are right now. Not only, and Biden's top priority when it comes to the economy, he wants to focus on infrastructure. He that's the most things he wants. He wants companies to focus on cost-effective saving programs. When Biden makes these changes, all these companies are going to be forced to find ways to be more of a renewable company, whether it's purchasing new trucks. I mean, for that you want to buy any NGA, which is Lion Electric, which I think are the cheapest, I think, trucks that you could buy in the market right now. the ones that are fully electric, not like which is the company that has gas vehicles, but it's not doing very well. I can't remember. Now, I mean, I'm not saying that all these companies are going to immediately switch to renew, electric vehicles, or electric commercial trucks immediately, but I just don't think that the ones that are doing on gas, like Helion are going to do very well. I mean, Helion is trading at, I think, $11 right now. I mean, it makes sense to me for a company like that to be trading at $10 right now, because first of all, you don't have electric vehicles. You're definitely, I believe that Helion was quite new to this market, and not only do you not have those other two, you don't like the most important one is that you don't have electric vehicles. And now I'm not expecting companies to switch quickly over to electric vehicles, because that actually costs a lot of money. But the options that Lion Electric is providing, which I think is the best EV, electric company when it comes to commercial vehicles, their costs are actually pretty good. And as you know, Lion Electric, ticker symbol NGA, has an option with Amazon right now if they want to purchase 20% of the company, and they already have Amazon trucks. Amazon has already bought their trucks, and I'm sure that they're buying as much as they can from each provider to see which one, is going to be the best and is going to cost the least. That's I'm sure why they're testing all of them. They're buying whatever truck. I think they bought some of GIK, a few of those I think they bought. And if you're looking at the STEM platform, recently STEM just offered, they just got their largest project with Kisargi Energy, pretty saying that wrong as well, and in Massachusetts it seemed. This is the largest project so far, and the stock actually barely moved because we're also focused on what the market is doing. The market right now has been the most volatile it's ever, I think, that I have ever experienced. I mean, the closer you zoom in over the past couple of weeks, you see these massive go ups and goes, and then you see these massive dumps. It's like trading. It's like people are day trading the stocks in the S&P 500, or maybe even SPY itself. You see these large spikes up, and then you see the large spikes down. And I mean, I don't have a case for why the stock market would continue to go up after the enormous run that it had since March. I mean, not only have we almost run, I think, more than 66% since that March crash, we do have a lot of new money in the economy that has been injected, like a tremendous amount of money. But I mean, I just can't make a case for stocks continuing to go up. This could be you could say that this could be the start of a larger run. Maybe this could be the start of a 2-year downtrend. Right now, that's why that's why short-term ideas are mostly the best things to give out right now, because over the last few weeks, if you had been a swing trader, you got destroyed, especially if you were heavily mixed into technology stocks. And that's why I think that's one of the main reasons why STEM has just been trading this way, because SPY has been trading erratically, and of course people are moving, or at least investors are moving into safer stocks and dumping their stocks. But I don't think that STEM deserves to be around the 20s. And here you see that STEM keeps testing the support of the 20s. It tested the 20s back in March 5th. Then it just tested it again on March 25th, which is, I believe, was last Friday, and bounced right back up to 28, I think even 30 at one point. So STEM clearly has established that it has its own support around 20s, and I don't think that we're going to see it go farther beyond that as we keep heading into whatever the future is going to bring over for the stock market. Whether we're at the start of a 2-year downtrend, or maybe we're at the beginning of a stock market that it goes even higher and potentially stabilizes or maybe even crashes back to normal. But as now, I think there's a lot of companies that are that we're trading at just an enormous P ratio, and they needed to calm down. I mean, if and for STEM, even Jim Cramer has even recommended it, which is someone that I don't usually listen to. But even Jim Cramer has recently discovered it, and he wanted to know if someone he wished he knew he bought it sooner, and that's why I have these alerts here on Stock Tweets. If you just want to come and give us a follow, it's absolutely free. There's no subscription or anything required. We alerted this earlier many times, as well as many other stocks we alerted as well. NGA was one of them. Not only we didn't alert it in February 19th, we alerted it way before that. NGA was alerted, I think, around 12, 13, and maybe around the 14s, and of course NGA will all the way up to 35, almost 40. Same thing with THCB. We alerted that one in the 10s and the 12s, and of course that one hit 24, 26, and then it's coming down. It's right now sitting at $12 per share, which is incredibly undervalued to what I think it is. But as again, thank you guys for watching the video. If you did like it, please make sure to leave a like and subscribe. As after all, I will be back with more short-term ideas. Thank you for watching.